The numbers are in, and month over month, the number of transactions has increased by almost 40%. In this video, I'm going to tell you what this means for you as the buyer and what you should be aware of. And if you're planning on selling your home, you'll want to stick around. Welcome back and thanks for tuning in. My name is Andrei with the Medow Group, and we service Ottawa and surrounding areas, all things real estate. If you're new to the channel, please consider subscribing and hitting that bell notification for upcoming content. And if after this video you might have a question about the current market, there's a link in the description below and you can schedule a call directly with me. The Ottawa Real Estate Board just released its numbers for March, and oh boy has the market ever picked up. Not only did our number of sales or transactions increase by almost 40% from February to March, but so did the average price in almost every single asset class, except for one. Let me know in the comments below if you know what type of home actually decreased in price last month. I was just as surprised. The number one question I've been hearing is, why all of a sudden is the market on fire? Let's consider the following. First and foremost, buyers have been witnessing a roller coaster ride with interest rates since our peak market exactly 1 year ago in March of 2022. Every single month the rates went up and buyers just weren't ready to commit to something, knowing that the next month the economy might change again. So they pulled back to the sidelines and decided to take a break and wait for the right time. Well, the right time was last month when Bank of Canada, for the first time in a year, decided to pause its interest rate, and buyers jumped on the opportunity to get back into the market. After all, they've been patiently sitting and waiting, armed and ready, and now it was time. Then we have more inventory and options in homes sitting on the market for 40, 50, 60 days, and that means a discount on price, right? Not exactly. Yes, at one point we were almost in an official balanced market, which is 4 to 6 months of inventory, but that actually just slipped away as buyers rushed back into the spring market, which, by the way, is our busiest time of the year. And with that, let's take a look at what happened in March. Okay, so here we have our month over month comparison, and we are going to start with the number of sales at the very bottom. So I want to compare February to March, and this is where the title of the video comes from. This is where we are seeing that aggressive increase in the number of transactions. So back in February, our number of sales were 855. And fast forward to the end of March, we are at 1,194. So a 40% increase in the number of transactions that are being happened in just 1 month. As we go up to MOI, which means months of inventory or available supply, we dipped from 2.7 to 2.6. Back in January, we were 3.8, which was very close to a balanced market. So we're back down to a regular seller's market at 2.6 months of inventory. Take a look at DOM, which is days on market. In January, we were 44. February was 40 and March was 34. The reason we're seeing this dip is because the amount of buyers that came back into the market, they are taking much faster to make the transaction. They are looking to purchase a home, and this will affect the average days on market. Now, let's look at the asset classes at the top. We're going to start with detached homes. This is the only asset class that actually fell in March. We went from 764,000 to 751,000. Semi-detached homes trading at 629 in February. They increased to 695, so almost hitting that $700,000 price range. Again, a very interesting asset class. I talk about this all the time. It's a great step up from a townhome to not getting all the way to a detached. It's going to give you more square footage. You are going to get the end of one of the homes, so a little bit more privacy and only one wall that would have a neighbor. Let's look at townhomes, probably our most popular asset class, a great starting point for families and young professionals, and a great upsize from condos. We were trading at 582,000 in February. Fast forward to March, we're now at 609. So a good, healthy increase right there. And condos, which I talk about a lot as well, is what the average income producer can afford, a great entry point into the market. And as you can see, if we go all the way back to November, December, January, February, March, all kind of hovering in that low to mid 400s, excuse me, an asset class that really holds its value and held its value all of 2022 during those rate increase. So in February, we're at 410. It increased slightly to 418. So again, this is going to give you a good understanding of where we are today. So what does this mean for buyers? For buyers, the average price is increasing because of the competition and because the days on market are lower and because the inventory is getting a little bit smaller as well too. And of course, the number of transactions are rising. For sellers, you can expect your home to sell a little bit faster. You are going to have to properly price your market according to fair market value. What is fair market value? That is what the buyer is willing to pay. And of course, you have to compare some of the recent sold properties in your area to be able to properly price your home. There you have it. Those were the numbers for March of 2023, and now we understand what we can expect for spring and the next couple of months. The average price is increasing, bidding wars are popping up again, not as aggressive as last year, but there is competition between buyers, so be aware of that. And our housing supply is tight again, meaning that we are back to a seller's market. We do have another rate announcement coming up this month, and we'll see if it will affect the current demand that's already back into the market. And something that I'm keeping my eye on is which asset class in April will see the biggest increase and decrease month over month. Thanks for watching. Catch you in the next one.